Today's economic update is going to cover the first quarter of 2026. We're going to go through headlines and what areas of the market have moved the most. All right, so for headlines, we've seen a couple of major themes so far this year in 2026. We've seen uncertainty, whether it be with tariffs or jobs or the Iran conflict or interest rates, and uncertainty tends to lead to more volatility. So it's not that there are tariffs, that there are jobs reports, that there even is a conflict. It's that there's uncertainty that comes off of that. And markets tend not to like uncertainty. They want to predict what's going to happen in the future. The more uncertainty that's out there, the harder it is to predict. Second theme here is volatility equals a policy hold. So when there is volatility off of that uncertainty, what we tend to see is policy being held the way it is. The Fed is a great example of that, holding interest rates steady in March. Now, the Fed was expected to lower interest rates at least once, maybe twice so far in 2026, but with more uncertainty, they're more hesitant to do that, which tends to be a theme, right? They don't have as much information, they don't want to jump into making a decision. The last thing that we have here is market rotation. This is something that maybe you haven't seen a ton of headlines on, but it's something that we've been focusing on, and we're going to talk about more in the next section here as we look at the movers and the shakers in the market. For movers and shakers so far, if we look at this list so far year to date, where we have real estate at the top, going through Bitcoin at the bottom, S&P before that, this whole chart is kind of a flip-flop of what we've seen over the last number of years, where the S&P has been leading the way, Bitcoin's been doing tremendous, and things like the Russell 2000 and real estate have been trailing. Now, what has changed so far this year is we've been seeing more and more of a rotation into other areas of the market. So things like foreign equity, emerging markets, the Russell, real estate, these are things over the last 12 to 18 months we've seen more of a rotation into, more people using them, more of a return contribution as opposed to what we've seen in the past. Now, over the last month in particular, it was interesting with the Iran conflict, a lot of these areas pulled back. So real estate's the only mover still so far in the year, still up about 4 to 5%, but pulled back about 5% to land at that 4 to 5% mark in the month of March. The Russell was down about 5%, fixed income was down, emerging markets and foreign equity were down double digits in March after the conflict. Buffered equity held up a little bit better, down about 2.5%. And then we have the shakers on the bottom. The S&P 500 now is down 4 to 5% on the year after pulling it back as well in March. The only area that appreciated in March was Bitcoin. So while it's still down about 20% or so on the year, you can just see that different areas of the market move in different ways. And generally, the goal of a diversified portfolio is to mix as many of those pieces together so that when some stuff is moving one way, other stuff is shaking in another way, so that you build out a portfolio that tends to have a little bit more diversified risk control metrics that are built into it, because you want things that can kind of move in different areas during different types of market environments. Join us next month for our next economic update and follow along.